let's get into it. Today we're going to talk about consolidation and market fakeouts. You'll see always when I bring up my chart here. It's the reason why my message is a little bit longer. I look at the big picture, then move down to the smaller picture. If we sit here and look at the market right now, we're looking at a bullish moving into a bearish market. Um, Looking at that, we're on a downtrend, and this is on the monthly time frame for British pound yen. You can see how the market went up. Um, it met some kind of resistance, right? Still one right here. Met some kind of resistance, and if we just stop and take a look, we actually can move this right here. Let's see. It met some kind of resistance while we were here. About right there, right? So back here, and if I look at that date, and I'm pretty sure it's like 2015. Um, that's where the last time it had that resistance, right? 2014. So again, this is on the monthly. So it hit that higher high, met resistance, and it bouncing back. So we know we're in a bearish market right now. So that's the methodology we're going to use moving forward with the rest of our charts. Okay, cool. So look at our weekly. Weekly showing the same thing. You see where my line is, up, up, up. We tapped out here where that line was on that monthly, and then back down. We got a engulfing week here, and then a push back. Met some resistance. Look right on that line. Met some resistance, and started shooting back down. So right now we have a bearish week, and we're in a bullish week right now, and that's just because of pullback, right? Um, and you'll notice, like with every candle, there's always pullback. So if we're looking on a weekly schedule, um, that pullback may be a day, that pullback may be 2 days. We don't know. Just always keep that in perspective. A pullback could be minutes, it could be hours, it could be days, depending on what time frame you're looking at. So again, right here we looked. It's bullish. This wick right here right now is bullish. The candle's bullish, and then look, it's going red. So it's already done this pullback. It might go higher, we don't know. But right now, it's done this pullback, and now it looks like it's going to be trending down. So with that being said, again, we're looking at our daily right here, and you can see where we had a down, and it's back up, and it's back down. So you see on different time frames how much more detailed it gets as far as your charts go. Your charts go, it could be like a couple little ticks to right here where we have 5 days in each week, and before it was like three candles. That's 15 days worth of trading. So now we have 15 candles to represent that move down, and you see during that time you start seeing different ranges in which price moves. So we have price moving from here all the way up to here, right? So again, that's the top of the monthly candle, and this is on the daily chart. This is the bottom of that. We can go back here and just take a look on the monthly, and you see right here, boom, right here. This is the range of the candles over the past few months. So going back to that, like I said, we're on a daily chart. Price has been moving past couple months between these two lines. And this is what we consider consolidation, right? So in consolidation, you see the trend that it pulls back, but it hits support twice and then rejects one more time. So right here you have 1, 2 rejections, 3 rejections. You come down here, you hit 1 support, 2 support. So with that being said, on a daily chart, we have a line of support right here at 154.634, give or take. But you see that support is there. And even here, it came right down here to, what line is this? 155, 59, where you see there was support here and it bounced, it went straight back up. So again, charts are charts. They don't lie. They're very cyclical, and they tell a story. So looking at that, let's look at our current situation where we're in a bearish market. Let me clear all this up. We're in a bearish market, and we see right here that we're in a downtrend. Now you see all these engulfing candles. You see that there's a pretty heavy market imbalance right below us. So with that being said, let's go ahead and look at this 4 hour. So right now at the 4 hour, it's looking like the market is consolidating. So let's go ahead and put some levels on here and see what's going on. What is this? Hit the wrong button. Okay. So if we look here, and again, we're in a bearish market. So these lower lines, these are rejection points because we're in a bearish market right now, right? And anything moving up, that's showing support anytime it bounces off of that line, right? Because right now, currently, we're in a bearish market. So let's look here. We have one line here. And let's do the second line right here. Let's go back and look at our daily. So if we go back and look at our daily, we see right here where there was some imbalance right here between 165 and 320. Market came back up to that. Now it's starting to reject from 165, 320. We see right here in the daily chart that was a rejection point right here. And moving forward, so like again, like I said, we have these down here, and price is moving between these two lines, right? So if we stop and just take a look for a second, we have a wick going to this line, then all the way back down here. Then a wick up here, it still hits this line. You see several times that these wicks hit 160, 72, 742. You see the wicks hit it a couple times, showing resistance coming from a bearish market. So that's when you start seeing consolidation. So we look here. We're going to put another level right here. This is where we're looking for price to break out from, right? So at this point, you see price moving in between these two lines. You see it hit resistance 1, 2 times. It hits the support 1 time, right? So at this point, we're either looking for price to close below 167.42 with a strong close, a 4 hour close strong below that. Retest 167.42. That means we're looking for a close just below. We're looking for it to retest. We get the right one here. Looking for it to retest. And then we're looking for a down. Now, the case being, while I'm sitting here looking, that we have some orders and imbalance that has not been filled, like right up here. So the market may move all the way back up there to fill that and then come down. So you'll see a move like this where it's exactly where it is. And then it just comes back up, which is a retest, right? It's a retest of this level up here, 164.337. It's a retest of that. and then we see price come back down. Now, not saying that it still won't hit this line and do a little resistance test and then go back down and then continue down. It may have a smaller version of this over here, or larger, excuse me, larger version, because this is a smaller one. A larger version of this over here where it comes down, it'll retest and then shoot back down again. However, we're playing a waiting game at this point. So with consolidation, you see a lot of times there's a fake out going where you'll see a test. Here it is, 1, 2 times. Looks like it's coming down for a third time. It's going to test it. And we'll see where we close out. Now you'll see that 4-hour close below, and then it'll come right back up to 162, 164, trading in that range that you see right here. So with that being said, this is one of those cases where you see consolidation leads to a nice little fake out. So we'll just wait to see what happens. I prepared like a little zone over here where we had more of a bullish market. Let me see if I can let me move this over. Okay. Zoom in a little bit. There it is. Okay. So again, if I step out, let me step out to a step out to the monthly, and we see here that was let me move it more to the middle here. We see right here where I put those boxes, rectangles. It was more on the bullish side. So with that being said, we were looking here, markets down, it's coming back up, down, came up, down, up, down. Looked like we were coming back up, and then it turned right back around and went back down. So here's the market fake out where we're thinking it's going down, and it turned around. So again, we talk about those wicks and how price has to pull back into those wicks every now and then, right? Not every now and then, it always does. And depending on how the market is moving, sometimes it's short wick, sometimes it's long wick, right? That's where you get all your hammers and things like that. So let's go ahead to the weekly. Then we're gonna go over here to the daily where we start seeing how the market starts consolidating. There you go. Okay. So how the market starts consolidating. So we're looking here at these two situations where the price moves in a certain range. And you'll see here this first box, how price. Let's go back to the daily. See, let's zoom in just a little bit. So you see the bottom of the wick for the daily and the top of the wick for 3 days. And let's look at our 4-hour. So we're looking at price to break out, right? And go more bullish at the time. And price just, what does it do? It oscillates between this range and this range, right? And we're like, oh, it's been bullish. Hey, I'm gonna get a couple of these bearish candles and it's gonna take off, right? It doesn't necessarily do that. I'm looking at the range right here. It takes, what is this? 1, 3, 6, 9, 12, 15. 15 4-hour candles before it decides, oh, okay, I'm gonna push back and break structure, right? We don't get a break structure until almost 24 hours later. What is it? 1, 2, 3, 4, 5, 20 hours later. It finally breaks structure, which is this level right here, right? And we get a 4-hour close above. And here's our fake out. Closes 4 hours above, and look at that. It starts tanking from there. We're thinking we're gonna get a breakout. It's gonna keep going up north, going bullish, and then it takes a couple of, what do we say? Resistance 1, resistance 2. excuse me, support, support, then it goes down. However, at the time, it looks like because we're in a bullish move, is support, excuse me, resistance, resistance. Then it tests support right here, and then it keeps going down. We didn't know it was the other way around, where the market was changing momentum into a bearish market. So again, we see how fake outs and how consolidation, we have to be patient with that. Number one rule, got to be patient. So when you see the market consolidating with what people like to call going sideways, you have to take the time to wait for that confirmation, wait for it to retest, and then make your move to get in the market. If you get stopped out, you get stopped out. At the same time, waiting for the market to retest and then to confirm which way the market's going minimizes your risk. Again, we're here to minimize risk, right? So again, thank you for joining the channel. I am Christopher Campbell, C3. This is the Investment Process channel. Like, subscribe. See you later.